In the name of Allah, the most beneficent, the most merciful. I am Muhammad Asif Chaudhary, and few days ago I give you a very good news that my research has been accepted in the International Journal of Financial Study, which is now published. I promised with you that once it published, then I will discuss with you all the process of research and what was actually it and what are its result. Now, Alhamdulillah, with the help of God and cooperation of my co-authors, my research has been published. The topic was board diversity, tax avoidance and firm performance, how board is helpful to the performance of firm by mediating role of the tax avoidance. I am thankful to Institute of Tax Professionals who give me a chance to elaborate my research. What is the motivation for the research? Because for every research you have an motivation. This motivation gives you a courage to do that research, and the motivation was that the tax avoidance is a global issue. It's not only a Pakistan's issue or subcontinent or Asia's issue, but it is the global issue. And corporate governance influences the decision of the management to avoid taxes or not to avoid taxes, and the gap of mediation analysis is missing. When I read the articles, I find a gap that there is no any mediation of tax avoidance in the research. To fulfill this gap in the knowledge, I try my best to do a research by mediating the tax avoidance. That was my motivation. And what was the research question? For my research, the question was, do board attributes influence the firm performance through tax avoidance? There are a lot of studies that board attribute influences the firm performance. But in my study, through tax avoidance or mediating of tax avoidance is a new thing and which give a very good result, which I will discuss with you in future. Now, what are the theoretical framework? Because for every research you have to use the theories, and the theories which I used are the agency theory and stakeholder theory. Because when management decide to pay proper taxes, avoid taxes, evasion of taxes, then there arise a conflict between the principal and the management, principal and agent. You know, the agency theory of Macking was that which deals with the conflict of the principal and agent. And for stakeholders, because for paying, collecting and for the taxes, there are a lot of stakeholders like government, tax collecting agencies, population of that countries, buyer, supplier, all are the stakeholders. So the theories are used, agency and stakeholders theory. My conceptual framework was that the board attributes impact or give effect on the tax avoidance, and both altogether increase the firm performance. That was my idea. And the variable used in are the board gender diversity. If board is diverse and genderly diverse, what it can affect on the tax avoidance. Board independence, if board have reasonable independence, then what it affect. Board diligence. Board diligence means how the board meets and how after there are what is the turnover of meetings of the board. That is board diligence. And board expertise, is any expert available in the board who is financially expert or who have a knowledge of taxation and finance. And ETR, effective tax rate, what is the tax paying rate of an organization and what are the tax paying rate of its peers, which shows that which firms are avoiding taxes and which are paying as per the rate of taxes. And return on asset performance mean what is the return, as return of asset is the proxy for the return of an organization, so it show the performance. And what the data and sample use in my search, I use the data of 62 Pakistan Stock Exchange firms which are listed in Pakistan Stock Exchange. That were the 62 firms, and the period for these firms are 2009 to 2025, the post financial crisis period, because in 2008 there was a financial crisis in all over the world, and post financial crisis which checks how the firms are established and overcome the crisis. Non-financial companies are taken because most of the financial companies give the services only, but in the non-financial sectors there are a lot of manufacturers who give a lot of employment in the peoples of the country. So my concern was that, therefore I considered the non-financial companies. For methodology of data, I collected the data and make the panel of that data with the time series. Panel was for almost 16 years of the data, and 62 firms were there. I run the OLS regression model and GMMS for robustness, because the GMM deals with the time periods, and it is the modern technique for calculating and analysis of the data. So I use the modern technique of GMMS. And now what are the key findings of my research, or what are the direct effect? Gender diversity has a positive impact. If there are more women in the board, they have a positive impact on the performance, and negative impact on tax avoidance, mean they avoid low taxes, because they mostly try to avoid the conflicts and pay proper taxes. Like that, independence board also have a positive impact, and board expertise have a positive impact, but the board diligence insignificant, did not give the significant results. Now I talk about the tax avoidance results. Gender diversity reduced tax avoidance, as I discussed in previous slide, that gender diversity reduced the tax avoidance, and independent board reduced tax avoidance, expertise reduced tax avoidance. They all reduces the tax avoidance and improve the performance of the firm, which shows that if you avoid low taxes, then your firm will perform well. If we think simply and we decide that the firms who save the taxes, avoid the taxes, they have a lot of cash flow, it means they should perform better. But my research shows that in the long term, when you did not avoid the taxes, you perform better. And now, how it is possible? It is possible because when the firms who go into the tax avoidance and evasion, they have to face a lot of penalties, they have to face the badwill from the populations, they lose their customers, they lose their goodwill, therefore they cannot survive and sustain for a long period. So the firms who did not avoid the taxes, they survive and sustain for a long period. Mediation result shows that tax avoidance partially mediate the relationship. So it mediate the relationship. Once it may be possible, sometime the mediator did not mediate the relationship, but in this case, tax avoidance mediate the and significant indirect effect on the performance of the firm. Now, what the policy implication may be done, what the policy makers can do, my research prove this, that if the firms did not avoid taxes, they perform better. So I will request to policy makers that promote the gender diversity in the board, strengthen the board independence, and encourage tax compliance. The families who pay more taxes will survive and sustainable for the long period. These are my suggestion for policy makers. Now I conclude my research that governance improve the performance and reduce tax avoidance, enhance the sustainability. The firm who did not avoid the taxes, they sustain for a long period and perform good. Now please subscribe the channel, follow for more tax update, case laws and FBR insights. Thank you very much. If you have any question, then contact on given number so that your question may be answered. Thank you very much. Have a nice day.